Let's get the link for this. Send this over to Joseph.
Yo.
Hey, Joe, could you hear me?
Yeah, I can hear you.
All right.
Hear me?
Yeah, I can hear you. We're all good to go. How's it going?
It's going good, man. A little tired, but
yeah, it's got back from work.
yeah.
Man, that sucks, bro. I can't imagine ever going back to work. Because when you talked about the commute, man, I used to commute like 1-2 hours a day coming from LA to Orange County. I'm not sure if you're familiar with California at all, but
Nah, not really, but I do the same commute. It's crazy.
yeah, dude, it sucks. It sucks. I can't imagine ever going back to that because now I'm just, chilling from my homes, trading and stuff. So it's been pretty good. Hopefully you get there at some point,
Dude, I can't wait because it wears on you, you know? Especially like all the money you spend doing it
Oh,
just to
exactly.
make money.
Exactly. And it's like your money doesn't really go anywhere because you're just going in a circle pretty much. You don't really have, that much to invest in when you're pretty much just working for money, and then you don't have much time to do anything on the side.
Yeah, it sucks.
Yeah, man, you'll get there eventually, bro. That was that was basically my goal. It was like to stop working for money and just, be able to trade and not really have to do much. And it's been pretty nice so far. I've been trading since March full time. So it's been pretty smooth. Like now I make as much as I would make monthly, like weekly, or if not daily
Oh
sometimes.
shit.
So
Damn.
it's nice. And I used to be an attorney, so I used to make pretty good money before.
Yeah.
So now it's just, man, it's a relief, bro. Relief.
Damn. Hey, look, quick question outside of that. What are taxes like?
Taxes. So I run all my profits through my business. So
Oh, nice.
so taxes, I mean, I still pay, pretty decent in taxes, but I have a lot of stuff to like offset those taxes when it comes to like business expenses.
So you write it off?
Exactly. So if I'm going to be, running some, marketing stuff, or if I'm opening like a new FTMO, the FTMO is like maybe 600, like I think it's like 650. So if I'm ever opening another FTMO account, that's pretty much like a tax write-off. So I pretty much get to trade and then take as many chances as I want with FTMO. And then if I lose it, just write it off, start another one.
Yeah, that's nice. I'm that's the only thing I'm like not worried but concerned about is like I don't know the difference between capital gains and if it's just regular income.
Yeah.
But I mean I haven't made enough to where it matters yet, but
no, definitely. Yeah, no, the capital gains tax is because before I used to trade like through my personal accounts, and from that point, that's when I had to pay capital gains tax, and it was pretty high. It was I don't know, like between 30 and 50% depending on how much you were making. But then once I started making more and more money, that's when I started to open up like businesses where I can pretty much trade from. So I'm trading through a business account, and then from that situation, I can offset a lot of expenses that way. But once you get to that point, just meet with like a tax guy that actually knows what they're doing, and they'll pretty much walk you through what you really need to do. But I could also give you like the basics. Like once you get to that point, you can ask me like more specific questions, and I can basically walk you through it because it's not really that complicated. It seems complicated at first, but once you have your first run around, you're pretty much set. Because I've been doing it for maybe I think 2 years now.
nice.
So the first year it was like you. I didn't know what to do. I didn't know exactly how to figure everything out. But then I figured everything out, and now it's pretty much smooth. So I think like for now I have like one business for my trading. I'm thinking about opening another one to start another FTMO for like my family. It's gonna be like a
trust. Nice.
Yeah, because I could pretty much just copy my trades to their account, and then I'll have like my 300K account right here, and then I'll have theirs as well. And the way that FTMO pays you is through an invoice. So it's more so you don't really get capital gains on those because you're kind of getting paid for your service. You're basically trading for them. You're not
Oh,
necessarily
nice.
trading. You're not necessarily trading your own account. So it works a little differently. So that's a little, I wouldn't say loophole, but it's a different way of getting paid because
Yeah,
you're
that would be like income tax, right?
exactly, yeah, like a self-employment tax, basically.
Nice.
Yeah. So that's why I prefer to trade off FTMO than trading my own account because then I'd have to pay taxes on capital gains and stuff like that.
Yeah, I tried FTMO. I think I tried twice.
Oh yeah, what accounts
Yeah.
did you use?
50 and then 100.
Okay, they didn't.
And
I'm assuming they didn't play out right.
nah, because the first time the 50, figuring out,
Lot
how
size.
to, no, like your losses, like your max daily
Oh yeah, yeah.
loss. That was
Mhm.
confusing. And then the 100, yeah, that one just didn't go well.
Yeah, the main thing with FTMO, that's why I only trade US 30. Like a lot of people want to do a little too much. They want to trade Forex, they want to trade the London session, they want to trade the US session. For me, I just trade the US session so that I know my risk going in and out of the trade. So I don't get caught in that daily loss that you kind of got
Hmm.
missed the first time. Because if you have an active trade that runs until the next day, which I think for CES time, it's like lunchtime Pacific time. So are you on the East Coast?
Yeah.
Okay, cool. So that'd probably be around 3 p.m. your time. That's when the day resets for FTMO. So a lot of people
Oh,
didn't
really?
realize that. And if you carry on, like say you carry a loss from the first day to the next day, right? Those
Yeah.
losses start to stack. So that's why I try to get out before the New York session is done, so that I don't get caught with that daily loss limit.
Dude, I didn't know that. I
Yeah,
figured it was like, New York time. Like, when it like the day would change. I figured it was like that. What is it, that swap?
yeah, the swap. Yeah, no, exactly. It's because the FTMO is based in Prague. So there, you have to base it off their time, which is CES. I think it's Central Eastern summertime or something like that.
Okay.
But yeah, that's something that a lot of people get tripped up about because they always think that it's based on their time, but in reality, it's based on the FTMO time zone, which is CES time. So
Cool.
now for the next time you decide to do it again.
Yeah. No, I'm definitely gonna. It's just I want to, get better, and then I'll jump in.
Yeah, exactly.
I,
You want to
I'm
be 100% before
I'm
actually.
thinking about doing it like right before the end of the holidays because I think they said something about an extra 10 days on the accounts if you open one right now.
Yeah, exactly. Yeah, so you get an extra 10 days, basically a free week. And it actually works pretty well because if I don't know if you followed like US 30 from like the last couple of years, but basically at the end of the year, it usually ends up pretty bullish. Like it'll be super easy to just keep winning because you can just keep
Hmm.
like right now you can see this big drop happening for US 30. It's probably gonna keep dropping a bit. But towards the end of the year, it's just gonna keep going up and up and up. So you can literally just take trades, like buy trades, and then just keep writing it up. And that's something that I was just discussing with a couple of the other K2 members that have been trading for a while. Because I'm new to US 30. I just started trading this year. And they were mentioning that if you go back in data, pretty much at the end of every year, like in December, like US 30 will drop a bit and then it starts to just be super bullish towards the end of the year. So it might be a good time for you to start if you're
Yeah.
thinking about it.
Yeah, I think I might just to get that. The 10 days will definitely help me.
Yeah, exactly. That's going to help a lot. And in reality, you only really need like, I think maybe like 3 to 5 wins if you're trading US 30 to pass your goal if you're using the proper lot size. Because yeah, for me, I use a 15 lot. So 1.5 times 1500. Yeah, each trade I have profit potential about 2000. So in order to make that 10,000 profit target goal divided by 250, I only have to win about 4.4 trades. So that's not
Oh,
too
nice.
difficult, especially if you have that extra 10 days. That's going to give you about maybe like 30 to 35 full trading days because you have to factor in the weekends. But
Yeah.
it should be well enough because that's going to give you 30 something chances to reach these 4.4 wins in order to pass. So
Nice.
it's just something to keep in mind because the thing with FTMO is really about knowing your numbers. A lot of people
Yeah.
they try to wing it, and that's how you end up hitting your daily loss because you don't go in understanding your risk. From the start to the finish, basically.
Yeah. And I know that their lot sizes are weird on the US 30.
Exactly. Yeah. So I use like a 15 lot, but in reality, it's only 1.5, but it looks like a crazy
Okay.
lot size. So you basically just have to knock off the zero at the end. So you just move the decimal over by 1, and then it'll be equal to like the normal lot size. I'm assuming you trade with like Hugo's Way or something like that.
Yeah.
Okay, yeah. So if you want to compare it to Hugo's Way, you basically just add, you just move the decimal over by 1. So
Okay.
instead of 1.5, it'll be a 15, and if instead of a 10, it'll be a 1.0. So
Okay.
easy translation from there.
Nice. Yeah. So I looked at the strategy you were talking about, the 4-hour. Still, I don't like. I guess what do you? Can you show me how you do your zones?
Yeah, perfect, bro. So which pair do you like to trade? Because I can show you off that. That'll probably be easier because you can
I
relate to
I really don't have a pair. I just been following the signals and stuff.
Gotcha. Okay, so I'll just go off like the first part on the watch list, which would be odd CAD. So this would be, I'm just going at random right here. I'm gonna go ahead and turn on the, so this is how a blank chart would look. I would turn on the K2SR version 2. And then you can see from here, we have like a bunch of different zones that are kind of, merging with each other. So normally what you would do is you would draw these zones where each zone is. So you can see right here where the zone's created, you can draw one zone right there. But in this situation right here, you can see that this zone is pretty close to this one, right?
Yeah.
This one right here and this one. So what you can do is you can measure it. And if it's like below 20 to 25 pips, it's only about 5 pips. So in that situation, you can just merge these together because you're not going to take a trade where there's only a 5 pip gap, right?
Yeah.
So you can merge those together, make that one big zone. And then same situation right here, like for these over here. So this is where it gets kind of tricky. I think this is where most people get confused with because they're not sure if they should merge the zones or not. I'm not sure if you have that same issue, if you're just like,
Yeah. No, I do. Yeah.
okay, gotcha. So basically the way that I do it personally, I don't even measure it because I just try to eyeball it and then I see how far these zones are from each other. If they look really close, I'll just create one big zone because measuring it just takes too much time. It's kind of irrelevant because in that situation, either way, you're going to merge those zones regardless, even if you measured it, because it doesn't even look like there's much space in between them.
Yeah.
So I would just eyeball it. You can see right here that these zones are pretty close to each other. So I would just merge these as well.
Now you have to do this every day when you look at the chart. Like, do the zones change that much?
No, they don't. So if you do it on the 4-hour, they're usually good for the entire week.
Okay.
Sometimes I'll check on Wednesday to see, midweek to see if the zones change. The zones only change if price moves like a crazy amount. Like if it spikes like from like one end of the chart to the other end of the chart, then you'll probably have to make some changes. But most of the time, price doesn't move that crazy unless there's something going on in the market, like COVID news or the elections or something big.
Okay.
Yeah. So for the most part, what I do is I draw my zones on Sunday, and then during the week, I'll just, sometimes I'll just be like looking for trades and I'll just like turn on the indicator just to see if there's anything new. Because once you have the zones on the chart, you'll have everything colored in. So it'll be easy for you to spot if there's any new zones because you'll see like some weird lines like in the middle of nowhere,
Yeah.
Yeah. So that's one way to do it. But I think you should be pretty much fine just doing it on Sunday and then maybe on Wednesday double checking. But I think Sunday should be perfectly fine unless this like moves like from where price currently is to like way up here or even higher than that actually, like way up here, then yeah, obviously you're going to need new zones in this area. But if it pulls back to like down here, it won't really make a difference because it's going to retest these older zones. So the zones that you drew today will probably be the same that'll be like, towards the end of the week.
Okay.
So that's why I prefer to draw the zones on the 4-hour because it pretty much sets up your zones for the entire week. If you're doing it on the 30-minute or the 1-hour, then odds are you're probably going to have new zones because price moves a lot faster on those shorter time frames. It's only encompassing like a small little area versus like this whole zone right here. So if you go on the 4-hour, you can see that this whole chart covers up until September 15. So generally this would probably cover up until that same amount of time forward. So if that's like 4 months difference right here, it should be able to cover for like 4 months out here as well, unless it pushes into a new area, which is like way up here where you obviously don't have any zones. But if you understand how like Forex works, the market generally ranges. So as it's pushed up here, it's probably just going to come right back down. And then it's just going to keep retesting these zones and then pretty much bouncing around. until it ends up breaking outwards, farther up, or even the opposite direction farther down. So that's when you create new zones. But for the most
Okay.
part, you should be fine just doing it on Sunday. Yeah, I'll go ahead and like redraw these zones right here, just so that we can continue with the analysis of this. Let's draw this up right here. All right. So have you applied the strategy yourself, or have you just been like looking at it?
I've been looking at it. I did the class. I want to say in like June.
Oh gosh,
And
it's then, huh?
yeah, I tried one trade and it was good, but I forget what happened. But I think I blew an account. I got discouraged, and then I came back in September.
Oh yeah, no, definitely. Yeah, no, that always happens, bro. I mean, a lot of times you have to make those mistakes just so you can learn from it. Because if you don't make those mistakes now, you're gonna make them eventually. It's like bound to happen for everyone. Not everyone's
Yeah,
lucky, 100% of the time.
I
But
think it
yes,
was Euro USD. I had a
yeah.
I had a buy on it, and it was pretty nice. And I sold it too soon too. There's
Oh,
another
did you?
mistake I made. Yeah.
Yeah, the problem with the major pairs is that there's a lot of manipulation with those. So I personally prefer the minor pairs, the ones that aren't matched with the US dollar, because the problem with those pairs is that they're traded by a lot of people. So when they're traded by a lot of people and there's a lot of volume with those specific pairs, like the GU, EU, AU, NU, anything paired with the US dollar,
Mm-hmm.
those are the specific pairs that the institutions and market makers focus on, because they know there's a lot of people trading those. So there's a lot of money to be made for them there. There's a lot of people to get ripped off, within those specific pairs,
Mm-hmm.
because there's more people trading them. So you'll find a lot more manipulation happening with major pairs versus these minor pairs like odd CAD, odd JPY, pretty much anything that's not paired with the US dollar. The only time I trade the US dollar is when stuff is moving just one way, like how it was recently. If you look at all the USD pairs, they were all moving up because the US dollar was weak. So that's why I was trading these more often. But when they're like ranging or bouncing up and down, that's when I usually don't trade them. I just trade them when they're going in one direction, because
Okay.
it's easier for you to catch those moves. But there's no problem like with trading those. It just really depends on how the market's moving at the specific time.
That was another thing. The majors.
Hmm.
When I was trying to read the charts, they were so hard to read because they never, like you said, kind of went one way. It was always kind of sideways when I was reading
Exactly.
them. Yeah, so I never really seen anything that kind of like made sense to me at the time.
Yeah, exactly. Because it like I'll compare this odd CAD with like AU or something like that, and then I'll show you that the trades on odd CAD are actually super easy to catch versus these for like odd USD, because you'll see that these are kind of they range a lot, and the only time that you can really catch them perfectly is when they're all going the same direction. So if you were to look at odd USD right here, it's like straight bullish, and then you compare it to like EU and GU, you can see that they all look like they're moving the same direction. They're all bullish, and that's when I would trade those. But
Oh,
when
okay.
it starts to get messy like this, you can see that this is kind of going down. This is bearish, but AU is bullish, EU is bullish, NU is bullish. So these are all moving the same except for GU. That's when I would probably stay away from it, because they're going different ways, and generally they should be correlating in the same direction if one currency is really strong or one currency is really weak. The problem with GU right here is that there's a lot of pound news going on with Brexit. So I'm not sure if you follow the news or anything like that. You probably don't, because you're not like doing this 24/7. But
I mean, I enough to I know what you're talking about. The Brett. I heard they didn't have a deal, or they didn't
exactly,
come
yeah,
to a deal. Yeah.
exactly. So you can see right here, like GU was moving pretty smooth until the third last week when the Brexit news started coming out. And the thing with Brexit is that they've been going through that mess like for the whole year.
Mm-hmm.
So it'll randomly happen where they'll like kind of screw up the market a bit. But then once this starts trending upwards, bullish, it just starts moving smoothly upwards again. Then that's when I'd probably look at it and I'd be like, all right, they're all correlating. So I'd probably trade those specific major pairs. But if they're not correlating, they're not all going the same direction, then I would probably hold off and then just wait for them to balance out, because they can only go up so far until something happens. Like I think the COVID vaccine came out today, or Pfizer, and that's why you see this bearish move, because it was moving up and then all of a sudden started coming down for AU, EU, GU, NU, and UCAD and USDCHF. So they started going opposite just because of the like the temporary COVID news. But I think they're going to end up, swinging back in the same direction. So I think USDCHF is going to come back down. I think UCAD is going to continue down as well, and then all of these are going to end up following in that direction once the COVID hype has pretty much died down with that new vaccine.
Would you take USD if all of them were going the opposite direction?
If they're all going bearish, like coming down?
Yeah. Like if the dollar is strong, is that?
Yeah. So if the dollar was strong, so like for example over here, let's see, this happened around like September. So September right here, this is where it was pretty strong. It was just going down. So like from September 1st up until the end of September, you can see that they were all going down around that point over here. So you can see from Euro USD, it was coming straight down. AU is coming straight down. GU is coming straight down. They're all pretty much flush. They're all going the same direction. So in that situation, yeah, I would take those trades, but it only happens every once in a while. It'll happen like every couple months. So right now, I'm probably going to stay away from the USD pairs unless I see something that looks good. If they're all in the same direction, then I'll take the trade. If not, then I usually try to stay away from the majors because they're like I mentioned, they're the most manipulated. You could probably enter a trade and then it'll just spike randomly if there's some COVID news or if there's some news about the economy. I think this week there's the Fed's speaking on Wednesday, so they're going to be giving the economic projections, basically, how they see the economy growing from now until next year, and that's probably going to affect the market because they're probably going to say as much as they can to help out the U.S. dollar, because obviously they want us to have high morale. So this is probably going to continue dropping until like maybe the end of the week, and then it's probably going to end up reversing at some point, like maybe Thursday, Friday. So I would probably keep away from the USD pairs for now until they start moving smoothly. So yeah, I personally would stay away from those. But like I mentioned earlier, I was going to show you odd CAD. You can see how these, this one over here actually moves really smoothly. So like for example here, you see that we got a buy signal, price broke its structure right here, and then it's like a smooth move up. Same situation right here with the sell. We had a sell signal, it broke structure right here, and then it pretty much just moves down to the next structure, and it moves a lot smoother.
That buy, you would take that buy?
This one right here on the right.
Isn't it invalid, or am I reading that wrong?
Oh yeah, no, this is an invalid signal, but the strategy isn't based on the signal. So
okay.
Yeah. So if you're applying that 4-hour strategy that I was, that we were talking about, requirements here just to refresh your memory. So this is going to be the K² SR zone trading strategy on the 4-hour time frame. So right here, basically, first you want to identify a break and close past K² SR level, and then number 2, you just want to identify direction of momentum. So using K² TS indicator, and after that you can enter on the open of the following candle. So it's really simple. It's just basically just those 2 requirements. So first you want to identify break and close past the K² SR level. You can see right here we get a bullish candle, break and close past this level right here. So after that, you just want to identify the direction of momentum. So even though this is an invalid signal, we're not basing the entry off this specific signal. We're just trying to detect the direction of momentum. So we haven't gotten a sell signal yet, so our bias is going to be bullish. It doesn't matter if it's an opposite or invalid signal, because since we're not trading it on that specific candle, we're just looking at the direction of momentum. Because you can see here on the 4-hour, the invalid signals don't really matter as much as they would on the shorter time frame. So if we're looking on the 30-minute, this is where it would make sense for us to pay attention if it's valid or invalid, because let me see if I can find an example here. So like right here, we got a sell signal, right? But then price went the opposite direction, like straight up. So that's something that it would make more sense not to follow because we would enter that specifically on that, specific candle. But looking on the 4-hour over here, it's completely different because you can see that we have an invalid signal right here, but it ends up going up. Same situation over here. We have an invalid sell, but it still goes down in that direction because it's only invalid for that specific candle, but then it ends up following through after. Because sometimes you'll get an invalid signal, like something like this right here. You'll get an invalid signal. It'll slightly push up temporarily, and then it ends up dropping right back down. So the difference with these invalid signals on the higher time frame is that we're not trying to enter exactly on that candle, because if we did enter on this candle, we probably would have gone stopped out, right? Because it was a sell signal, but it shot up. Let's see how many pips. If you were to enter right here, it shot up like maybe 40 pips. You might have gone stopped out here. But if we're following the other strategy, it usually ends up swinging back, because if you look on the 4-hour, these invalid signals don't usually come up as often as they do on the shorter time frames. So just like disregard those invalid signals, just see them as the direction of momentum. So like right here, we identify the break and close. We identify direction of momentum. Since this was a buy signal, we have a buy bias. And then we just enter on the open of the falling candle. So we'd enter a long position right here. We'd pretty much ride this to this next structure for about, I guess, 30 pips. I generally like to have it like slightly below because I want to factor in the spread. You can see my spread right here is about 2 pips. So I want to make sure that I'm in and out of this trade before it reaches this zone right here. Because you can see the zone is like 2 pips away. So even if my TP is right here, price would technically have to be up here because I'd have to cover the spread. So that's why I keep it a little lower than the actual zone right here. Because the last thing I want to do is get this far and then it ends up reversing on me and it doesn't close my position because of the spread. You get what I'm saying?
Yeah, so the top of the TP, right? That would be the sell price, and then the buy price would be higher. Am I saying that right?
Yes. Wait, so basically, if you're an enter buy right here, in order to close out this position, you'd have to do the opposite. So you're in a buy. In order to close the position, you have to sell, right?
Yeah.
So you're correct with that. I think you're just kind of opposite. You were saying that the sell versus the buy, but since we're taking the buy, you'd have to take a sell to exit right here. Or I don't know if we just confuse ourselves, but
Yeah,
you
no,
get
I
what
know
I'm
what you're
saying.
saying. Yeah. The difference between the two prices, you got to kind of figure that when you put your profit in.
Exactly, yeah, because you'd have to add the spread. Like my spread's about 1.8. You have to add that spread on top of the of your TP, because in order to exit this trade, even though you got up to 30 pips right here, you still would have to cover the spread, which would be 1.8, and I'll just round that up to 2 to be safe. So you'd have to technically reach up to 32 instead of 30. So price would technically have to be up here to close you out, even though you'd only get closed out at about 30 pips.
Okay.
Due to the spread. So that's why I like to have a little bit of some cushion right there instead of putting the TP like straight to that point. Because I'm sure you've seen before where you put your TP at a certain point, and then if you're looking at your chart, you'll see that price passed it, and you're like, "What the heck? Why didn't it close out?" And that's because of the spread.
Okay, that makes sense.
Yeah. So basically, right here, if I was to let that play out, you can see right there, it got close to the stop loss right here, but it ended up hitting the TP. And this has to do with a lot of like market manipulation as well, because the thing is, a lot of like the market makers, they know that a lot of people are entering the same trade where price break structure, because this is a common strategy where price break structure. The thing is, a lot of people don't realize that everyone is putting the stop loss in the same place. Everyone's putting their stop loss like right over here at the bottom of that structure. So that's why we put our stop loss a little bit lower, so that we don't get caught in this little spike right here, and then we can survive the move.
So do you do your trades one to one?
Yeah, normally 1-to-1. Yeah, actually always 1-to-1, because if your stop loss is too close, like say you have like say you're trying to do like a 1-to-3 or something like that. If you're trying to do like a 1-to-2 or 1-to-3 and you have your stop loss right here, because this is how a lot of traders like to trade. They like to trade right here and they end up getting stopped out. By the time they get stopped out, it swings right back into profit.
Yeah, that's happened to me multiple times.
Yeah. I mean, it's funny because a lot of people think that you have to trade 1-to-3 or 2-to-3 or like 1-to-4 or anything like that. But from my experience, stop loss really doesn't matter, because you're going to move your stop loss and profit anyways. Like a lot of people think 1-on-1 sucks, but for us, since we're using the exit strategy, once price reaches, like this point over here, like TP1 or something, then we would move our stop loss and profit, because I trade based off risk percentage. So there's a lot of people that trade based off pips, and that's just the wrong way to trade, because if you're trading off risk percentage, like say if I have the 100K FTMO account, right? And then your risk is going to be 3 to 5% for like full profit, right? If you end up closing out at TP1, you're still locking in 1% of profit, because your full profit would be 5%. If you're locking in TP1, which would be 1/4% or a quarter of the move, that would be about like maybe 1.5% profit. So if you're trading a big account, like a 100K account from FTMO, and you're only taking home 1%, you still take home $1,000 off that trade, even though it's just TP1. So I'm not sure if you base things off risk percentage or if you do it off pips, but this is
No,
like,
I do it. Yeah, I do it like you just said, off the risk.
okay, perfect. Yeah, because a lot of people, it's funny. Like I always have to show people this, that let me just show you real quick.
The only thing I do, I go straight to entry as soon as I can, just so I'm like, there is no risk on the trade.
Oh yeah, no, definitely. Yeah, when you get a chance, that's probably the best way to do it. You just have to eliminate your risk whenever possible. Because like for something like this, like say if someone had like even a $10,000 account, a lot of people don't realize this, that if you do 3%, it doesn't really matter if your stop loss is 10 pips, you're still risking 3,000. If you're risking 100 pips, it's still 3,000. But a lot of people don't see that, and they get stuck on like the pips, or like, oh, your stop loss is 100 pips, that's way too wide. But then I always have to explain to people that it should be based off risk percentage, not stop loss, because the stop loss is there for a reason, Because like if your stop loss was too tight, you would have gone stopped out. If you just follow directions and put them, where we have them set, or like where I advise people to put it at, like anyone could have survived this trade.
Yeah.
Like worst case scenario.
Well, that happens to me when I try to scalp. Like, and I'm always telling myself, like, dude, you messed up again. But like, I'll put the stop loss too tight, and it'll get stopped out. And at the time, I'm like, all right, whatever. I didn't lose, too much. But then I watched the trade, and I'm like, if I would have had a little more on the stop loss, I would have made what I was looking to make.
Exactly. Yeah. So I think the sweet spot to put your stop loss would not be right at the structure, somewhere like right below it, or even farther below to the next structure, because you don't want to put your stop loss where everyone's putting their stop loss. Because the thing is, the market makers and institutions, they know where your stop losses are. Like brokers say they don't sell your stop loss points, but they do. Like they I'm sure these institutions and market makers, they pay a lot of money to get this information where everyone puts their stop losses. So if they see a high volume of stop losses in this one area, they're going to spike it to that price to stop everyone out before, pushing it where it's supposed to go. So that's something to keep in mind when you're taking your trades, or when you're analyzing where to put your stop loss.
Okay, so you're looking at the bottom structure, and
Exactly.
you're gonna go under that.
Exactly, because the thing is, a lot of people put their stop loss at that same area, like right at the structure. You got to put it like a little bit below, or even farther below, to avoid getting caught in any like spikes in price like this right here.
Now, but that won't affect your profit zone, right? Like your profit zone is set on the structures, and then your stop loss. Like if you would have set a long position and it would have ended up on the bottom of that structure where the two wicks went past, you would move it down a little bit, even though it wouldn't be 1-to-1.
So in this situation right here, it worked out perfectly, because the way that I calculated it, so the way I calculated this entry right here, I calculated it to the full TP right here. TP would be right below the next structure, and it just happened to fall right below it as well. If the situation happens where let me see if I could find another example here, because your stop loss would be more important than your TP. That's like the main thing. So let me see if I could find another example here where we would apply that. Okay, so something like this right here. So if we were to enter this trade, all right, let me see if it's too tight. I mean, this might be, it's not that bad actually, 25. So generally for right here, some people would put their stop loss somewhere like right here where the structure is. And since our TP would be somewhere right here for about 20 pips, that might be a little too close as well. Yeah, it'd be about too close. So basically for me, I would want to have my stop loss somewhere over here, or even farther down to like somewhere over here for about maybe like 40 pips. So if that was to happen right there, like of course the risk would be higher, but what I would do is I would use the exit strategy. So our TP would be, TP2 would be somewhere out here, and TP1 would be somewhere like around here. So as price moves up, I'm going to eliminate my risk whenever possible. So in that situation, even though we have a 1-to-1 risk, once price reaches this point over here, I would, eliminate my risk, put my stop loss up to TP1 or TP2 so that I can, lock in some profits. So you don't end up holding this trade for too long and then end up getting stopped out right here because you would have not moved your stop loss in profit.
Yeah.
So I think the stop loss is way more important than the TP, because the main goal here to be like consistently profitable is to not go for the home runs, but to keep stacking profits and eliminate your losses. Because if you if you have little to no losses at the end of the week, and those little profits, even if it's just TP1, those profits are going to keep adding up. And then if you keep compounding your account because you're trading by risk percentage, your profits are just going to keep growing and growing, no matter if you keep taking TP1, TP2, or if you hit full TP. You get what I'm saying?
Yeah. And then you'll increase your lot sizes as you grow, right?
Exactly, 100%. And that's the thing with a lot of people. They don't realize that trading is a long-term game. Everyone wants to get rich like by tomorrow, so they go and they try to go for these home run wins.
I wish it was possible.
Exactly. If it was that easy, everyone would be rich from trading, right? There's only so many people that are successful at trading because they have the discipline to lock in profits. And they understand that not every trade should be a home run win, because most of the time it's not going to happen. Like as hard as you try, it's probably not going to happen unless you have like a huge bankroll to just keep taking trades and then letting them run to like full TP and stop loss. And then once you get on that hot streak, then yeah, obviously you'll make all that profit, but you probably won't have your account last long enough to get to that point if you just never like eliminate your risk.
Yeah, I've been in even signals that you called that where I missed the TP1 and I let it run and it stopped out.
Exactly. Yeah. Exactly. And that's just that's the way that the game works, really. It's like it depends on how the market's running, because sometimes there's times where I'll just let the trade run. Or if you saw how I execute my trades, I usually run twin positions. So I have one where I adjust a stop loss, and then I have one where I let it run to full TP or stop loss. So in that situation, I usually lock in either 1.5 to 2 times profit, or if I lose the trade, we almost always hit TP1 or TP2. And in that situation, I'll be able to minimize my losses. So instead of
Hold
taking
on one second, my bad. Hold on.
Yeah, go ahead. Go ahead.
Sorry about that.
Yeah, all good, bro.
I almost lost my computer. It's dying.
Oh, oh man.
Yeah, I got the headphones in too, so I'm like, oh, my charger's all the way over there.
Yeah, man, that's why I had to get a desktop, dude. That happened to me too many times where I was online on my laptop, and then all of a sudden it just dies on me. I'm like, damn, just keep plugged in all the time.
Did you build it yourself?
No, I got a iMac Pro.
Oh, nice.
Yeah, I wanted to get a computer, but I'm just too I'm too like used to the Mac interface, because I have like everything's Mac, like my phone, my iPad, pretty much everything's connected to Apple. So it'd be hard for me to go back and forth, because then I can't use messages on my phone and stuff.
Yeah, I like the Apple phones. They're like just consistent. Nothing changes.
Exactly.
It's perfect.
Exactly, and it runs smoothly. Like I've never had any issues with it, so I was like, I might as well just go all in with Apple, even though I could probably build a way better computer for the same price. But it's just it's really simplicity. It's the same with trading. Like with trading, I try to keep it as simple as possible, and then you see a lot of other traders that try to make it as complicated as possible, and it makes it makes a huge difference, because if you make it too complicated, you're gonna miss out on a lot of good trades.
Yeah, that's I watched all of the YouTube videos where you're watching guys like, this is how you have to do it, and you're like, dude, it doesn't make any sense.
Exactly. They have like 15 indicators up, and they're like, this has to match this, this has to match this, this has to match that. And the thing is, you'll be waiting for a trade for like days, weeks, months, and the trade never comes. And then once you have that one trade, there's still no guarantee that it's going to hit, So you could have been waiting all that time for that one special trade, and then it could still hit stop loss. And you're like, damn, I waited a whole week for this. and it didn't even play out like I thought it would.
Yeah, that sounds like when I had my account managed when I first started.
Yeah, man, you got to be careful with those, bro.
It was a rough entry into Forex, let me tell you.
Oh yeah, how long you been trading for? A pretty long time now.
Um, Me personally, since September.
Oh, you're pretty new to this. This isn't like,
Yeah,
yeah. Okay, so you're still getting your feet wet. That's actually pretty
yeah,
good that you just started and then you kind of started with K2 because the problem is there's a lot of traders that come to K2 and they've been trading for a while, but the problem is they learn from someone that didn't really know what they were doing. So they come to K2 and they bring all this information that they learned from another person. And then when they see K2 is so simple, they're like, are you sure this is it? And they try to add all these extra things to it, end up flopping that way because
yeah.
they're used to trading one way. So it's probably pretty good that you're still pretty new because you're basically a sponge at this point.
Yeah, yeah, really, yeah. And K2 is you're the only group that I follow.
Oh, nice, bro. Yeah, yeah. There's a lot of people in the group that they still follow a lot of other groups and they try to compare and contrast like our strategies and my trades and their trades, and then they always end up coming back to K2. So I'm like, you guys might as well just stick with K2 at this point.
Yeah, I mean, you give opportunity to pay for the subscription, so it's like why even waste time, in other places.
Yeah, exactly. No, definitely, 100%. I mean, for some people, it's just they have to make a lot of mistakes to figure out what's right and what's wrong. So I'll just let them
Yeah.
keep doing what they're doing until they figure it out. But yeah, bro. So let's see. So we pretty much went over the strategy. I don't know if there's anything else that was confusing you about the
Well,
strategy.
the uh, the pips, right?
Mm-hmm.
So all right. So I look at this chart. I draw the zones. I wait for a candle to close above or below a structure, whatever direction it's going.
Yeah.
I'll set up my trade, and it'll be determined on the zones, like between the two zones, right?
Exactly. Yeah. So it can be determined by the zones, but it can also be determined based on your stop loss. Like I mentioned earlier, like
Oh,
if
and
your
then
stop
you'll
loss.
use the exit strategy. Okay.
Exactly. Yeah. So sometimes your target doesn't always have to be at the zone. So like say right here, if you were to take this trade, it doesn't necessarily have to be like right there at 30 pips. Your move can go even farther up. The main key is that we're anticipating price to get to this point, and then once it gets to this point, you just have to play out the pros and cons. Like you have to look at all scenarios. So for scenario number one, we could anticipate this to reject off this point, and then that's why we would move your stop loss and profit, because if it ends up reversing on you, you'll still lock in this much profit up here.
Yeah.
Scenario number two is price reaches the structure and then it breaks right through and it continues on up, because there's a lot of different ways to apply it. So for me, if I'm able to actively manage a position and I'm not too busy, what I'll do is sometimes when price reaches this point, I'll remove my TP. So I'll take off the TP, delete that, and then all I'll do is I'll just keep moving my stop loss and profit. So as it keeps moving up like this over here, see, so when price comes up to this point and then it breaks through that structure right there, I might remove my TP and then just move my stop loss up with it. So as it continues to move up, so right here I would have gone stop down profit, obviously. But if it was to continue up even further, like something like this, I would just keep moving my stop loss higher and higher until it would actually stop me out. So right there, it would have stopped me out, and I would have made the full TP right here plus an extra 8 to 10 pips right there. So that's one way to do it. There's a ton of ways to apply the exit strategy. I just give that simple exit strategy because a lot of people still get like confused with how to apply it.
Yeah.
Like I mentioned, I try to make things as simple as possible. But for the more advanced traders, that's something that you can do as well. You can just remove your TP and then just pretty much trail your stop loss up with it. If you want to use either a trailing stop or if you want to do it manually, I like to do it manually because if you do a trailing stop, odds are you're probably gonna get stopped out when it swings around. Like right here, you can see prices kind of moving a little crazy. So that's why I would probably not do that. But going back to what I was saying earlier, I'll just rewind back to here. Your stop loss doesn't, I mean, your TP doesn't necessarily have to be at that specific price point. If your stop loss needs to be a little bit wider, so like right here, your stop loss might be too tight. If you want to move your stop loss down here, it's like about 50 pips, you can do that as well. But you
You'd
just
have
gotta
to figure the lot size, right?
Yeah, exactly. So you have to figure the lot size because you're going to base your trade off the risk percentage. So that's why I always recommend that you figure out where your stop loss is going to be first, because your lot size is going to be based off where your stop loss is. Because depending on where your stop loss is, that's where your risk is going to be adjusted from.
Okay.
You get what I'm saying?
Sense. Yeah, that makes a lot of sense.
Yeah. So your TP should never be important. It should be your stop loss because, like I mentioned before, like your main goal is to eliminate risk. Your main goal is to take as little losses as possible and stack up those profits, whether it be TP1, TP2, or full TP. Because if you just keep stacking those wins, they're just going to keep adding up as you keep compounding your account. And I feel like that's one of the main things that a lot of people get twisted up on, is because they get scared that the stop loss is too wide. But like I mentioned before, a lot of people don't realize that you're supposed to calculate it off risk percentage and not off, the number of pips here. Because a lot of people don't even calculate pips or calculate the risk. They just randomly put, a 0.01, and they'll move from like 0.01 to like a 0.10. And it's like, dude, you didn't even calculate, that it's a huge difference depending on where your stop loss is versus your lot size.
Okay. Yeah, that makes a lot of sense. I know, doesn't TradingView give you that when you set the position?
Oh yeah, exactly. That's why I love TradingView. I like trading on TradingView versus MT4, because if I wanted to enter a trade right here, say for a buy, I would put my TP, or like I mentioned, TP doesn't matter because you can put your stop loss at 50%. And then if I want my risk percentage at 3%, it'll automatically adjust my position size. If I want to do stop loss of 100, it'll automatically adjust my position size right there as well. So every time I move my pips, it'll automatically adjust my position size for me, versus me having to just enter a position size and then have it based off the pips.
They'll actually buy it for you through here?
Oh yeah. If you use Forex.com, so they have a couple different brokers that you can use. Let me see if I can find it over here.
That I have another question.
Yeah. So if you look at the brokers here, these are all the brokers that are supported by TradingView. They usually only allow U.S. regulated brokers. So for Forex, it would be like Oanda, it would be Forex.com, and I think there's a couple other ones too. They're just not on this list. But there's a whole bunch on here that you would use. So I personally use Forex.com. I've been using this since I started trading Forex, and it's fine. The only problem is that it requires more capital to trade it versus like Hugo's Way or something, because you can have like, what is it, like 1 to 500 leverage. But but for Forex.com, since it's US regulated, it's capped at 50 to 1. So you'll need a little bit more capital in order for you to trade Forex.com. But the thing with trading is, like, it doesn't really matter what the leverage is, because leverage only allows you to lose more money. So if you're using 3%, it shouldn't affect you at all, because you can still trade it on Forex.com, and you can see how easier it is to just enter a trade there. Say you want your stop loss at about 50 pips, and then you just change that to like 3 or 5%, and then it automatically adjusts for you right there, my unit size.
Yeah,
yeah, and it makes it a lot easier because it makes you trade responsibly. Because on MT4 you don't have this there, so you're kind of just typing in the numbers and typing in your lot size, and you can easily over leverage without even knowing it. Because each the thing that a lot of people don't realize as well is that each pair is valued differently. So if you're trading odd CAD, it's going to be a lot cheaper to trade this versus trading something like EG, because the exchange rate for our US dollars are a lot higher for these cheaper pairs versus something expensive like EG. So like a 0.01 on odd CAD is going to be completely different from how it is for EG over here.
Really?
Yeah, it's huge, bro. It's like, so let me check this out. So right here for EG, if you were to risk, let's see, like 50 pips, right? 50 pips, risk percentage of, or actually this is not going to make sense because the risk percentage is going to automatically adjust the position. So here, I'll do this right here. So we'll do a standard lot. We're not going to look at risk percentage, but looking at a standard lot, it's 100K units. So for 50 pips right here, if you're trading a standard lot, it's going to be a risk of $666, right, for EG.
Yeah.
And then if we go over to odd cat over here and we do the same thing, position size of a standard lot, and then stop loss at 50. So EG, you're 666. So you can see that it's a huge difference depending on what pair you're trading. And a lot of people don't realize that.
Oh, I never realized that. That's crazy.
Yeah, that's why sometimes you'll trade pairs like GC, like any of the pound pairs, you're going to be risking a lot more versus trading the AUD pairs because the AUD is a lot cheaper in comparison to these specific currencies.
Wow.
Yeah, so that's something to keep in mind, that because yeah, go ahead.
No, I was gonna say, what does the leverage have to do with anything?
So leverage is just how much margin is required to take a trade. So if your leverage is like 50 to 1, then you could probably only risk about 5% max per trade, right, at a time. To have like, so say if you want multiple trades up at a time, you can only have 5% risk up max at a time. If your leverage is like 500 to 1, you can risk like half your account. You can risk like 50% at a time versus just 5%. So I think that's something that you might start to realize. Yeah, you might realize it once you go from Hugo's Way to Forex.com, because for Hugo's Way, you could probably run like, maybe you said you're risking like risk percentage of like 3%, right?
Yeah.
Or do you risk anything higher? So if you're risking 3% on Hugo's Way, you can probably take
higher.
Oh, like 5-10%.
Oh no, man, dude! I just got a small account. I'm running your US 30 calls, just to make my money back. Yeah, so it's like it's crazy.
Yeah, so like for Hugo's Way, you can risk like, I think for US 30, I think for $1,000, you can risk maybe a 0.03 to a 0.05 risk on that, and that's like risking like half of your account. Like you're literally risking like 50% of your account to run that one trade. For Forex.com, since they're US regulated, it'd be impossible for you to trade US 30. Like I can't even trade gold on this account because the leverage is so low. So I don't trade gold at all. So yeah, that's why a lot of people don't trade gold with like $100 like on Hugo's Way, right? Because they don't care. Like on Hugo, if you're trading gold on there, they'll let your account go to zero. For Forex.com, since they're US regulated, they'll only let you risk up to 10% at a time. And the reason for that is because of the stock market crash. I'm sure you're familiar with like what happened in 2008, like when everyone lost money. So that's why that law got put in place, because they didn't want that to happen again. Because a lot of people, they were just over leveraging and they lost like their entire account within like one day when the market crash happened. So in order to prevent that from happening, in order to prevent that from happening again, that's why they set this new law in place. Well, it's not new, but it happened from after that crash, so that people wouldn't have enough leverage. So instead of losing their entire account, like their whole life savings, they can only lose about 10% before the broker's like, hey, bro, you got to get out of this trade because you're losing all your money. Yeah. So yeah, that's why people don't like US regulated accounts, but they don't realize that those laws are set in place to protect the trader, not to limit their profit potential. It's more so they don't go blow all their money on like one trade.
Yeah. I'm not a fan of Hugo's Way, but I'm using it just in the meantime.
Exactly. No, same here. The reason I use Hugo's Way is because I haven't found a reliable indices broker for that's regulated. And the thing is, it's not going to be easy to find because I don't think US markets really allow for it because it's such high risk. Like the leverage is like super high. So you wouldn't be able to trade indices, but you'd be able to trade like the actual future contracts.
Okay.
So yeah, instead of trading US 30, you'd be trading like the Dow 30, which is pretty much the same thing because the price is the same. It's just that it costs a little different, versus trading indices where it's easy to just, enter the trade and whatnot. For futures, the pricing is a little different.
Yeah, I noticed on my trading view, I have two US 30. I got the Owanda, and then I think I just have the regular Dow. And sometimes the prices between the two are like 20 pips difference.
Oh yeah, yeah, no, definitely, yeah. Because the future has the raw data. That's usually the raw price, and the indices is usually like it's a there's a market maker that creates the pricing for that. So they're basically mirroring the price of the future, but they have their own special pricing because they need
Oh,
to
okay.
factor in all the fees and stuff to reflect like how people can trade that specific thing. So we're both like based in the US, so obviously we can't trade US 30 on Oanda, but we have a couple traders from like Malaysia and like some other traders from like Indonesia, and they can trade US 30 on Oanda. It's just not us because like I mentioned, it's restricted in the US due to the whole leverage issue.
Oh, okay.
Yeah, so that's why I use Hugo's Way as well. I don't recommend it to anyone, but I use it myself because I understand the risk. Like I have like
Yeah.
yeah, because I have money in there, but it's like if I lose that money, I already know it's going to be my bad because I already knew that it was a shitty broker to begin with. So
Yeah, they're pretty shady, man.
yeah, no, they are for sure. And you'll see the US 30. One thing that I realized is when I used to scalp it on Hugo's Way a long time ago, if you trade around like midnight, or I guess for your time that'd probably be around like 10 to 1 a.m., you'll see that US 30 just freezes up for whatever reason. Same time every
Really?
day. Yeah, it's happening before I was scalping, and then the whole app froze for US 30, and I ended up getting like blowing my account because I couldn't exit the trade because it just freezes up around that time. And that happened like earlier this year. I remember after that happened, I was like, I'm never going to trade US 30 again. But here I am, back at trading it. It's hard to stay away, bro, because when you see all the profits, it's
Ah, it's
like
so quick, man. It's
it's
so quick.
it, yeah, exactly. And that's what I like about US 30 so much because I could make enough profit with like one or two US 30 trades to cover my whole week of Forex trades. So it's like,
Yeah.
how can I say no, you know?
Yeah, that's why I opened the Hugo's Way account just because they're like if you hit 3 trades in the week, it's a few $100. Quick, easy, done.
Exactly. Exactly. Yeah. It's like 150 per trade if you're trading like the smallest lots, like it's like the
Yeah, that's
0.01.
what I
If you
do.
hit full
Yeah.
TP, exactly. And it's easy, man. It's like we take it once a day. You have nothing to worry about. You just take the trade and then you go on with your day pretty much.
Except the one day I think Trump tweeted something
Oh
and
yeah, yeah.
it dropped. The market crashed like in seconds.
Dude, I'm so glad Trump is not going to be doing it anymore because I remember sometimes we would be so deep in profit, or we'd be right at TP1, and then like one day we were at TP1, and all of a sudden Trump tweeted something, and it just skyrocketed, and I was like, damn, dude, we could have just closed that at TP1, but all of a sudden he texts something, and it just shoots price in the opposite direction like crazy.
Yeah, I messed up one day. I set my stop loss at break even and it shot down, stopped me out, and I got like greedy.
You
I'm
you
like,
hop
you know
back in.
what? Yeah, I'm like, yo, you know what? This is just it's pulling back or whatever. And as I got in, the bottom just fell out. Like I lost so much
Oh
money
man,
in
yeah,
seconds. I'm like, wow, dude. And it was my fault. I
yeah. That's
wasn't
why.
even mad. It was my fault.
Exactly. And like for me, that's why whenever someone always asks, where would you re-enter? I'm like, I wouldn't re-enter because if you're out of that trade, you're done for the day. Just call it a day, hop back on
Yeah,
next week because I that's happened to me so many times where I got greedy and I tried to hop right back in and I ended up like losing a ton of money where I could have just sat it out and just, picked up the next day.
yeah, yeah. That's I got to listen to that book you sent over.
Oh yeah, no, definitely. Yeah. If you listen to that book, what is it called? Trading in the Zone, that book
Hmm.
is pretty good. That's one book that I used to listen to like all the time on my commute. And it would just like I would keep listening to it and it would just get like ingrained in my brain. It's like, yo, bro, like remind yourself to not get greedy and to just, stick with your trading plan on like no matter what.
Yeah, definitely.
Yeah, dude, that's something that would be number one to work on. I think once you figure out your trade psychology, that'll definitely open up a lot of opportunities for trading because I feel like that's the biggest obstacle for most people. They're not able to hold on to the trade or they're not able to close out the trade like when they're
Yeah.
in a deep loss.
Well, last week, I believe it was last week or 2 weeks ago, we had that really good week. on Monday, I
Oh
screwed
yeah, yeah.
myself. I made money, but I screwed myself on Monday. And I like look back and I'm thinking if I would have just listened to the calls, let it go, I would have made so much more. But I'm like trying to jump in on this and that, and I ended up losing money the first day. I'm like, dude, what am I doing?
Exactly. You know, that happens to me all the time still. Like even till today, like sometimes I'll get kicked out of trade and I'll try to scalp my way back in, right? Like I get kicked out and I'm like, all right, I'm gonna exit and I'm gonna get back in and I'm just gonna try to like pick up these little pips. And then it gets to a point where I make like 2 or 3 wins. And then on the fourth try, I end up losing all of it because it ends up hitting stop loss.
Yeah, that's exactly what happened that day. And I did it like 3 times where I hit like the
Yeah,
loss
exactly.
3 times. I'm like, oh, dude.
Oh man. Yeah. Yeah. That's something that you should definitely work on. I think once you have that down, you'll be able to make a lot more profit because
Yeah,
it's really about just trading mechanically. You know, like for me, I take trades and I don't even think about it anymore. I'll take a trade and I'll let it run, and then once it hits TP, I'll move my stop loss and profit, and that's pretty much it. I'm not there like looking at it and trying to make
you
like as
could
much profit as possible.
on TradingView,
Yeah,
you
go ahead.
could set alerts, right, for your TP ones.
Yeah.
Can it go to your phone?
Oh yeah, definitely. Yeah, yeah. You could. Like when you
I gotta do
set an
that.
alert right here, let's say if I wanted to set an alert right here for price to like reach this specific price point, I could just right click, set add alert, and I'll just set something here like odd CAD, just for example, like crossing or TP1 stop loss, and then from there you can set the alerts right here. So I have Notify on app. This is gonna be the
Oh,
phone app.
cool.
So if I have trading on my phone, it'll send me an alert. And then right here, I have show pop up. So if I was to get an alert while I'm trading, it'll pop up on the screen as well. So I have alerts pretty much set up for pretty much everything.
Yeah, I gotta use that. I'm not using that right now. And if I miss like
Yeah,
a TP1 call, I could, lose the trade.
exactly. Yeah, exactly. That's why for me, I always set the alerts. That's the only thing that I do because I'll take the trade and then I'll send signal out and I'll just pretty much go on with my day. And then when I get the alert, I'll just pull up my phone like, okay, cool, I hit TP1, time to move my stop loss and profit.
Nice. Yeah, I gotta buy the I used to have the premium.
Oh, you got like the free one right now?
Yeah, I had it. I canceled it for the month, which was pretty cool because I had like a bunch of indicators up and they didn't
Yeah.
take them down. You can only have
Oh,
like
they
so
left them up
many.
there?
Yeah, yeah, yeah. I had
Oh,
like
you
every
can kind of like,
indicator.
yeah, you had a little loophole, huh?
Yeah. I
Nice.
couldn't add any though. I couldn't add any indicators. I could only just keep the ones on there.
Oh, gotcha. Yeah. Yeah, like I think you can still set a few alerts on the free account. You probably set like 1 or 2 alerts, but yeah, definitely if you want to like step it up and make it a full-time type gig,
Hmm.
you definitely need to have more alerts available. Like I have the premium version. I don't even use all the alerts, but it's good to have just in case like there's a week where I have like 10 trades running at a time.
Yeah, yeah. Because it's tough keeping track of some of them for me at least.
Yeah, no, same here, same here. That's why I just set alerts, so I don't even look at the trades once I enter. I just take a look once I get, a notification telling me that I hit like stop loss or something, or stop loss or TP, something like that.
I hope it's more TPs than SLs.
Oh yeah, no, definitely. I mean, it's been good like the past couple of months. Like I think like the past 2 months we've been like fire, dude. Like I'm even shocked myself that we've been that consistent because like normally I don't document all the trades, but since like K2's gone bigger, I've just been documenting every single trade. And I was like, damn, it's crazy how accurate it is. Because even myself, I knew it was accurate, but I didn't know it was that accurate. And then like having these numbers now, I'm like, damn, it actually really hits like that.
Yeah, it's I love seeing the weekly write ups that you do where it's like you made this much, you took this lot. That's pretty cool.
Yeah, exactly. Yeah, because it's crazy because I didn't realize that, adding everything up for the whole year, because this is the first time I've done a whole year, like from January to December. And I'm like, dude, that's crazy. If I just, because even myself, like, even though I posted these results, I'm not always that consistent. Like, I'm not as consistent as all of the results say, because for
Hmm.
myself, I do my stop loss and profit sometimes, and sometimes I'm not running to in position. But if I was to just let everything, play out like it's supposed to, like I've been advising people to, like the profits could have been like crazy, like super
Yeah,
crazy.
I like getting out though, even though
Yeah,
like on Friday it hit the US 30 hit TP1, and then it started pulling back a little bit. I got out at like it was like $68 because I ran the 0.01. But I was happy with that, even
Oh
though it
yeah,
shot up again. I was still happy. I'm like, you know what? I'm out. It was Friday. I don't have to worry about it.
exactly. Yeah, it was like 2 weeks ago, right? Like it was that Friday where we hit TP1, and I got out too. I even got out at TP1, but some people
But
held on to it, and then it gapped up like crazy where it hit full TP, and I was like, wow, like
oh yeah,
it
that
actually
one,
played.
yeah. But that was through the weekend though, right?
Yeah, exactly. And for FTMO, I can't hold into the weekend, so I just closed it anyways, even if that's TP1. It doesn't really matter to me because I'm not trying to lose the account. So
The first time I traded through a weekend on Sunday night when it opened, the two trades I was in, they were so far in profit. I had no idea what I was doing. So I looked, I'm like, oh, nice, perfect. And sure enough, it like pulled back, into negative. And I didn't know enough to get out, when it first opened, the market first opened. So it was a matter of like maybe like a half hour that it pulled back. But after that, I'm like, never again am I going to try to keep something open through the weekend. It's just you never know what's going to happen on Sunday night.
exactly, yeah, because you don't know what happens over the weekend. Like there's a lot of things that can happen. Like literally, like a war could start over the weekend. You don't even know about it, and then you just open your account. And you're like, damn, what happened to my position? And that's happened in the past before. Like especially when I forgot when the last war happened, the Iraq War. I
Like
think it was
2003, 2004,
at 2003,
2002.
2004. Yeah, I used to trade stocks back then. So when I traded, I held something over the weekend, and I literally blew my whole stock count like
Oh
over
my
the weekend
God,
when that
that
happened.
sucks.
Yeah, and it was a shitty time. That's when I stopped trading for like maybe a year or two, and then I finally picked back up like around 2010 because I was like, I just got to give it another run because there's so many possibilities out there and so much opportunity to be pretty much be financially free. That's pretty much how I am now. It's like I don't have nothing to worry about. I just wake up in the morning, take trades with you guys, hang out,
Dude, I
and
wish, man.
pretty
I
much go on with
can't
my day and
wait.
not really have to worry about much.
I can't wait. I want to
Yeah,
open
man,
up like my
it's a
own
great.
business and not have to worry about nothing.
Oh, exactly. Yeah, and that's what I'm doing now. So like pretty much all these profits that I make with trading, I'm pretty much funneling these into like other business ideas. Like I'm starting like this like wholesale business. It's kind of like Amazon where I buy like name brand stuff from like distributors and manufacturers. And then
Mm,
since I'm getting capital from my trading, I can pretty much have capital to go and invest in these products where I just pretty much buy stuff, send it to Amazon, people buy it, and then I just keep restocking. So that's like one business idea. Another business idea is I'm starting to get into like real estate. So I'm looking
yeah,
into
that's
like,
what I'm looking at, real estate too.
yeah, exactly. I'm trying to like dip my feet in like a whole bunch of different things and see what I like the most. But definitely real estate. I'm trying to get like a big ass apartment building. Hopefully I could get it by like maybe next year, if not the year after.
Oh, then you're
Uh,
set,
but
man.
that's definitely, yeah, that's definitely the goal. Because then from there, I'll have real estate, pretty much diversify myself into different types of assets, just to keep it going for the most part, and then I can just focus on trading, pretty much.
Yeah, I'm in construction. It's my day job.
Oh,
So
nice,
I
dude.
kind of want to, yeah, I want to roll that into something like on my own, like you're saying, real estate,
Hey,
just buying and flipping.
exactly. Yeah, you should get into like contracting, bro. I have a lot of friends that did that. Like they were in construction before, and what happened was they just stayed connected to like a lot of people they work with, and then they would just build their own teams. Like they would have people that they work with, and then they were like they ended up hiring them as their own employees, and then they do flips basically. They'll buy houses for like dirt cheap, or they'll just buy land, and then they have people already that know how to do construction, so they just
Yeah,
put homes on there, and then there you go, pretty much.
yeah, that would be so awesome. Being a boss, not having to report
Yeah,
to anybody,
yeah.
making your own money.
Hmm. Exactly. That's the
Oh
best feeling,
man,
bro. Like, yeah, like for me, I don't have to answer to no boss anymore. It's pretty much just me trading and
oh, that
pretty much
must
just
be
helping
so
everyone.
nice, man.
Bro, it's so nice. I don't have to answer no calls. I mean, I answer calls to like I answer questions from everyone else in K2, but I don't have like a boss telling me what to do basically. So
Yeah, if you
it's
don't answer the question, nobody's gonna be like, "Oh, why didn't you answer his question?" So you're fired.
exactly, yeah, yeah, exactly, 100%. Yeah, and being your own boss it's nice, man. I can wake up whenever I want to, go to sleep whenever I want to. It's pretty much pretty chill for the most part.
Yeah, that's my goal. I just got to get there slowly.
Yeah, dude. It's just, it's all about consistency. I think if you've only been around for like since September, so I think if you just stay consistent, and then I think next year could be your breakthrough year, bro. Because for me, I've been trading for like 10 years. I wasn't really that profitable until like maybe the last 3 to 5 years. That's when I was like starting to get consistent. And in the last 3 years, that's when I started being like super consistently profitable. And it just kept
Mm.
growing because I just kept compounding my account from there. And then finally this year was when I quit my job and then I started trading full time. So I think next year could be your breakthrough year, bro. You just got to stay consistent. Uh,
Yeah.
the more and more you trade, the more and more you practice, the better you'll get. So like for me, I started trading every single day and I just got better every single time. And it got to a point where I was like, man, I'm making more money trading than on my job. So I
Oh
might as
my
well
God,
do
man, that's
for
so
my job.
nice.
Yeah,
Just
because once
to
you
do
compound
that,
it,
man.
exactly. Yeah. I think for your account, once you get it to like maybe 40K, which it seems like a big number now, but in reality, it's not that much if you keep compounding it. You keep
Mm.
adding that 3% to it per trade. Once you get to that point, you'll start to see the profits roll in like way deeper and deeper. And at that point, you'll be like, damn, why do I still go to work?
Yeah, but you're
Yeah.
not doing that with Hugo's way though, right? Like you wouldn't
Oh
put
no,
that
for
kind of
sure.
money
No, no, no.
onto.
I have that on my actual like Forex.com account. Because
Oh,
at that
okay,
point,
yeah, yeah.
yeah, because at that point, when you have that much capital, leverage doesn't really mean anything because you have enough capital to cover the margin anyways.
That's
So
true. Yeah.
yeah, so I could trade the same way that you trade on Hugo's way, but on my Forex.com account. Um, for my Forex trades. But then for US 30, that's why I prefer to trade on FTMO because then I don't have to use Hugo's way, and then I don't have to worry about the payout because they pay me out every month anyways.
How does
So
that work? They
that's
send you a
that's why I
check,
use.
invoice, you said, right?
Yeah. So they send me an invoice. I have it through Skrill, which is like PayPal, like the international PayPal. So every month, um, I think my reset date's like on December 12th. It every month on the 12th, they'll send me an email like, hey Shawn, this is your payout. How much do you want to take out, right? And then the first couple months, I only took out a little bit of it because I wanted to have some cushion so that if I end up having a bad month, I won't lose the account because then I can just lose more versus the set 10,000 a month. So every month they'll send you an email like, hey Shawn, this is how much you made. How much do you want to take out? I tell them how much you want to take out, and then they send it over through Skrill, which is like PayPal, and then from there I transfer that over to my bank.
Oh,
So
nice.
that's pretty much how I do it. You can do a wire transfer too, but when I first did FTMO, nobody else was doing it, so I didn't really trust them at that point just yet. So that's why I didn't want to do a bank wire. But then I do Skrill, and it's the same thing. It's not a big deal doing your withdrawals through them because they send you your money within like 1 or 2 days. And if you want it faster, you just pay like the extra fee. But at that point, you don't really need it.
Yeah, yeah, I know what you're saying. Yeah, that's better than I hate
Yeah.
taking money out
So
of
yeah,
Hugo's way because it costs money.
exactly. It's such a hassle, bro, because you got to go through Bitcoin and then you got to pay the Bitcoin exchange rate. And it's like
Yeah.
you're losing money by like converting it. So like for Hugo's way, I'm like, I should just leave the money in there and just let it grow. What I ended up doing is instead of taking withdrawals through cash, I would just take the Bitcoin and I would just leave it in the Bitcoin wallet. So like, I think now my Bitcoin, I think I had like 300 to 500 bucks in there. It's up to like nearly, let me see, it's pretty high. It's like nearly 1,000. So it grew like crazy over the past 2 or 3 months.
I had like 300 bucks in Bitcoin and I took it
Yeah.
out when it was like 12,000.
Oh man. Yeah. No.
Yeah, man. I'm like, fuck.
Yeah. For me, because like I mentioned, I'm trying to like dip my feet into a whole bunch of different things. So like before, I used to be so skeptical about Bitcoin, but now it's like I'll just park money in there, and that's money that's just I already like came to like the conclusion that it's going to be gone anyway. So
Yeah.
I just leave it there, and then I check on it like every month, and it just keeps growing. And I'm like, damn, this is crazy. It's actually really growing.
You think it's going to stay at 19?
Um, Honestly, I don't know. It could go either way. I think it's gonna keep going up. Honestly, it might just keep going on up, but I think by next year it might start moving weird because like I was looking at Bitcoin recently and I was like, damn, it really like moves so random. Like I don't know how people day trade Bitcoin because this thing moves crazy, and then the the spikes are like insane. Like some people just like buy the dips, which is what I'm basically doing. But if you look at Bitcoin from like a monthly perspective or even a weekly, these are some crazy spikes, bro.
Shit.
Yeah, from 2017, this is when it went up to like 19,000 and it dropped all the way back to like 9,000 or less than actually to like 3,000 from 17 to 18. And then, yeah, it just pretty much bounces all over the place. But like for me, like I mentioned, I already like know that my money's just gonna do what it's supposed to do. So I don't mind if I lose it all, but I also wouldn't mind if it ends up going to the moon and then I end up, making a bunch off that. So,
man, if I could go back.
Yeah, exactly. I don't really have an opinion on Bitcoin, but of course I'm gonna want it to go up because I just have my money like sitting there in my Bitcoin wallet for the most part.
Yeah, I wish I would have left mine in there.
I mean, exactly. We'll see how that ends up playing out.
Awesome.
Oh, crap. All right, bro. Do you have any other questions? I gotta head out. Sorry, I just realized it's 4. My girlfriend's like outside. She just messaging me like 10 times.
No, it's all good. I'm gonna try the strategy you showed me, and then I'll shoot you a message. Yeah. And then could we set another one of these up maybe like in a week or 2?
Yeah, no, definitely, bro. Let me know. Just give me a date and time, and then I'll set it up. It's my bad. I went off track with all this stuff I've been talking about, and I
it's all good.
But yeah, bro, definitely. If you want to set up another meeting this week, we can do that too. But if you want to set it up, if you want to practice for a bit and then set it up, then we can do that as well. Just let me know whenever you want to set it up, and we can get it going.
Awesome. All right.
All right, bro. Definitely, man. It was good talking to you, man. Hopefully this all plays out for you because I'm rooting for you, bro.
Thanks, man. I hope so too.
Oh.
Nice talking to you.
Definitely, man. Definitely. We'll keep in touch and let me know when you want to set up that next meeting.
Definitely.
All right, bro. I'll talk to you later.
All right. Talk to you.